available inventory of homes on the market is gradually decreasing for the winter. And as that happens, our focus shifts to what is going to happen with 2023. We can expect inventory to keep declining over the holidays and into the new year. Fewer people want to sell their homes until the spring is upon us, and that's totally normal. But with the spiking mortgage rates recently, inventory climbed very late into the year. But supply is definitely declining now. So while interest rates have backed off their recent highs, rates are still far above the affordability levels for most Americans, and that implies that significant increasing inventory of homes on the market in 2023. That's really how the year is shaping up. Significantly more inventory. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, now might be the time to step up. Go to altosresearch.com, book a free consult with our team, because everybody is worried about what's happening in the market right now. They need you to help them see clearly. The data we cover here is national in these videos. It is available for every zip code in the U.S. So join us, dive in. I'm Mike Simonsen. I'm the CEO of Altos Research. And here's what the data looks like for the second week of November 2022. There are now 568,000 single-family homes unsold on the market. Inventory always declines over the holidays, and because even as some homes don't sell, many get withdrawn from the market. So some of those will be relisted after the new year. This week, inventory is lower by just like 0.5%, which is a slower decline than normal years. This coming week is the Thanksgiving holiday, so inventory will drop by a much bigger percent next week. We'll actually take the next week off from the video for the holiday, but the following week will share the latest precise changes. We have almost 50% more homes on the market now than we did last year at this time, but still 36% fewer than 2019 before the pandemic. Because homes are selling so slowly right now, each week we inch closer to that recent normal levels of inventory. In 2019, there were 892,000 single-family homes unsold on the market at this point in the year. Back in 2016, there were just under 1 million. So for a long time, it's been hard for me to imagine how home prices could fall substantially while the supply side of the supply-demand equation was so constricted, which it continues to be. But of course, with rates so dramatically higher than last year this time, even as supply is still very constricted compared to recent history, demand is much, much lower. So supply is low, demand is lower. It's hard to imagine actually now how home prices could hold up in the next year with this equation. When we look at the number of new listings coming to market each week, it also remains super low. So there's very little new supply that's being added to the market. Only 47,000 new listings, single family, this week. That's 25% fewer people selling their homes each week than in any recent year. The dark red line here is this year. So we'll have a big dip for Thanksgiving this coming week, and then fewer new listings each week until the New Year's holiday, and then starts picking up again in January. One thing keeping the new listings line actually elevated a bit more than it otherwise would be is the rate of new construction that's getting finally finished and put on the market. So in places like Texas and Florida, a big chunk of the new listings are homes that have been in construction and delayed for much of the year. These are getting finished now and then listed on the market. So that's actually buoying the inventory numbers a bit. There are record numbers of homes under construction right now. And so more and more of the active market listings are new construction rather than existing. And that actually has implications for price changes in 2023. Builders may be more likely to drop their asking prices more quickly than sellers who live in their houses. That's something to think about as the impact of the market shifts to new construction over the existing. The total number of homes pending contract also ticked down a tiny fraction this week. So the newly pendings, those are the going into contract each week, are at super low levels. So we have 314,000 single-family homes in contract with about 47,000 new contracts started. That's 45% fewer home sales happening than last year at this time. Thanksgiving week, we'll see, of course, another drop in pending home sales, and then fewer each week until the new year. In this chart, each bar here is the total count of homes in contract, the pendings each week. The light portion of the bar is the newly pending each week. Then you can see how each week we have fewer and fewer homes in contract, and now that we have 45% fewer homes in that sales process than we did last year at this time. Our sales levels right now look like they normally do over the Christmas, New Year's holiday week. So as we move into December, it's going to keep dropping to pretty dramatically few levels, low level. Meanwhile, the median price of single-family homes in the U.S. fell by 0.7% this week, and the price of the new listings dropped back by 1.3%. So median home price is $420,000 right now, and that'll finish the year at about $400,000. The median price of the new listings is down to $369,900. And you can see the light red line here, how prices have deteriorated pretty consistently nationally since May. The price of the new listings is where we look at the homes that hit the market in a given week. And I love this as a leading indicator of where transaction prices will be in the future. Notice how the light red line always eases back in the second half of the year. But in the last 2 years, it was actually pretty flat, meaning we had stronger than normal demand late in the fall and winter over the pandemic, each of the last 2 years. In those times, if I was selling my house, I know the demand is there, so I price up accordingly. And what we can see now is that the sellers know the demand isn't there, and they're discounting each week if they want the house to sell. So the price of the new listings usually turns positive in the third week of January, and then we can look at the year by the slope and the how quickly that rises. It's going to be really interesting to see if that trend holds up in just 8 weeks when we round over the new year. And that brings us to price reductions as a leading indicator, with 43.2% of the homes on the market now having had a price cut. That's actually flat now for 3 weeks in a row. So price reductions have plateaued. They're not increasing anymore. The price reductions are down just a tiny fraction this week as a few homes get sold or pulled before the holidays. Normally by this time of year, though, price reductions are receding quickly as the inventory gets cleaned up for the end of the year. And you can see the trajectory of the dark red line here since September 1. That's really telling how dramatically buyer demand stopped at that moment that mortgage rates spiked from 5.5% to 6% to 6.5% to 7%. And that's really when that demand destruction kicked in. So, but price reductions have plateaued here at this high level. So that means we'll start 2023 with high levels of price reductions, which means that sales that happen in the first quarter, 2023, we can already see that prices must be lower when those close. So this is, of course, national data, and the local markets are behaving very differently from each other right now. If you need to get your local data for your buyers and sellers right now, you should join us at Altos Research. Go to altosresearch.com and book a consult with our team. We can show you how to interpret the data for the crazy market and look at it in your local market for the people who need it most right now. They need you to be the expert for them. So we look forward to working with you. That's all the data we have time for this week. We're going to take the next Monday off for the holiday, but back in 2 weeks. See you then.